Good morning, my name is Alfonso Galante and I am the head of Strategic Planning, M&A and Investor Relations here at Unipol at UnipolSai. I'm going to take you through our preliminary full year 2017 results today. 2017 has obviously been a very interesting year for us with the restructuring plans we announced in June. These plans have clearly had an impact on the results we are presenting today. The underlying results, however, are positive, and the operations we have set in motion will allow us to optimize our performance in the years to come for the benefit of all stakeholders. So let's start with the consolidated results. We continue to provide a normalized set of results which exclude the impact of the restructuring of the banking business in order to give a clearer picture of our underlying performance. On this basis, this is where we are. At Unipol, our net consolidated result stands at €655 million, a significantly improved performance when compared with this time last year. Again, for clarity, this excludes the effect of restructuring projects. The normalized result at UnipolSai also shows a very positive trend, with a net consolidated result of euro 649 million. Including the effects of the restructuring, the net consolidated results for 2017 is a loss of 169 million euro for Unipol and a profit of 537 million euro for UnipolSai, which once again improves on its performance last year. In non-life, total premiums are 7,867 million at Unipol and 7,355 million at UnipolSai, in a moderate increase on last year, despite a challenging environment. In motor, average premium decreased by 2.1% year-on-year, although in the second half of the year this trend flattened out, which is an encouraging sign of recovery in pricing. We continue to see strong performance in the non-motor business. I'd also like to highlight the particularly strong performance of both Linear and Unisalute, which were recently transferred to UnipolSai in terms of premium income and profitability. It's important to note that this transfer only has an impact on the figures for the fourth quarter. We have also highlighted the trend at UnipolSai on a like-for-like basis. The combined ratio after reinsurance stands at 96.4% and 97.2% for Unipol and UnipolSai respectively, and slightly higher than this time last year. I will also point out the significant impact of large and nat-cat claims this year, which was 1.4% and 1.5% greater than last year for Unipol and UnipolSai respectively. Drilling down on the motor business, we see an improved set of results. In particular, the number of claims is down by 3.6% versus this time last year. Frequency has also declined by 0.16 percentage point, and the combined ratio stands at 97.7%. Turning to our other insurance companies, we see good performance across the board, with all three companies improving on last year. First up is the continued strong performance of Unisalute, where premium income has increased by 10%, while the combined ratio remains strong at 87.5%. resulting in a net profit for the year of 43 million euro. Next up, Linear continues to improve its performance, increasing premium income by 15% and lowering its combined ratio to below 100%. Arca remains solid and stable and has delivered a further decrease in combined ratio to 63.3% from 64.5% compared to this time last year, resulting in a net profit of euro 30 million. As a reminder, I mentioned a moment ago the transfer of Unisalute and Linear to UnipolSai was completed in November. On the life side, the decrease in premiums at both Unipol and UnipolSai follows the recent trend, given our clear strategy to limit the sale of traditional products. It's important to remember that an element of the decrease is also driven by the closing of the Popolare Vita bancassurance agreement. Total premiums are 4,424 million euro for Unipol and 3,713 million euro for UnipolSai. Good profitability is still evident here, with a gap between the average segregated accounts yields and the average minimum guarantees holding at 1.7% and 1.5% for Unipol Gruppo and UnipolSai respectively. As you can see from the breakdown of technical reserves, given that we sell all new products with a minimum guaranteed yield of 0%, the guaranteed yield across the back book is steadily decreasing. Turning to the next section, here you can see an overview of the key indicators of the banking business, which closed the year with a net result of minus 747 million euro. As I am sure you are aware, on the 1st of February Unipol Rec became operational, with 554 million euro of net loans. We will provide you with further updates on this front in the coming quarters. In terms of non-performing exposure, the overall coverage ratio is 71% with respect to total NPE and 80% relating to bad loans, sofferenze. You can also see that Unipol Rec houses only bad loans covered at 81%. The Unipol Banca net NPE ratio is confirmed below 7% post-split. No material changes here. At Unipol Group, bonds represent 84.5% of the portfolio, of which 71% invested in government bonds. Total investments are equal to 61.4 billion euro. The asset allocation at UnipolSai mirrors this on a total portfolio of 51.9 billion euro. Again, the running yield remains solid at 3.3% for Unipol and 3.4% for UnipolSai. On top of this, a strong contribution from realized and unrealized gains led to a total yield of 3.7% and 3.9% for the two groups respectively. On real estate, I will point out the significant level of sales, which reached 198 million euro from 126 transactions. It's also worth mentioning the low level of write-downs at 22 million euro. The total amount of investments in real estate is 4.1 billion euro. In terms of our proposed dividend, 18 cents per share confirmed at Unipol Group and an increase to 14.5 cents per share at UnipolSai. On Solvency II, the ratios at both Unipol and UnipolSai remain solid. The ratio for UnipolSai consolidated on an economic capital basis is 2.06 times, while the ratio for UnipolSai solo using a partial internal model is 2.41 times. For Unipol Gruppo, using the economic capital approach, the ratio is 1.69 times. Here, for added detail, you can see a breakdown of the various components of own funds and SCR for Unipol, UnipolSai and UnipolSai solo. In conclusion, the underlying performance of our business is solid, our capital position remains strong, and the actions implemented during the year will further allow us to grow the business and remunerate our shareholders. That brings me to the end of my presentation. Thanks for listening. Let me remind that our CEO and the rest of the senior management team will be pleased to take any question from financial analysts and institutional investors during the conference call scheduled today at noon CET.